Are you self-employed, a freelancer, business owner who's having a hard time qualifying for a mortgage loan traditionally? Well, in this video, I'm going to share with you why a profit and loss statement may be a better fit and why you should choose this route if you're looking to qualify for a mortgage. If you're new to this channel, welcome. My name is Candy Katz, and I help individuals and investors like you buy and sell homes and also fund loans. So let's get into it. Profit and loss, known as a P&L. If you're a business owner, this is typically what is required from your tax preparer to submit at the end of every year, along with a balance sheet, etc. And did you know, in fact, you can actually use that profit and loss in lieu of traditional docs that are collected, such as tax returns, pay stubs. So number one is the advantage of qualifying for a P&L. You can go down as low as 10%. It's known to be a non-qualified mortgage, right, which is not your traditional FHA conventional loan. So 10% down is the minimum, but depending on the investor, if you're going the lowest down payment, they typically may require more reserves. So that can range anywhere from 6 to 12 months. Ideally, I've seen people put down 20 to 25%, and we can always gauge depending on your scenario. So that is the 10% down payment of your purchase price. So for easy math, $300,000 purchase, you need about $30,000 as 10% down before any closing costs, any title fees, appraisals, etc. Okay. Number two, the reason why this is a better fit is because most people have a problem qualifying traditionally. Why? Because as self-employed earners, they tend to write everything off. On a P&L, we're actually qualifying you based on how your business performed. So whether you grossed a certain amount, regardless of what your deductions are, we can actually go off of the business that you generated. So that is very advantageous to then help you essentially qualify for sometimes a higher loan payment based on numbers that you can't traditionally qualify for because you weren't able to show your full true net worth. And then also, P&L are products that are offered through what we call broker investors, right? So if you're working with a mortgage bank, a mortgage lender like myself, we actually offer this product in-house. If you were to sit down with a bona fide qualified lender and they tell you they offer a P&L product, I would challenge you to ask for the loan estimate so that way I can sit down with you and do a true side-by-side comparison. And where I'm getting at is 2.25 to 2.5% is usually what's charged to write this type of product. The beautiful thing about our parent company, AML Funding, is we write these products in-house. We underwrite, we process it, and those fees are anywhere from $13, $14.95 flat, okay? And that's including everything. So there's no additional discount origination fees unless you're looking to buy your interest rate down, perhaps buy yourself out of a prepayment penalty, or even remove escrow or impound. Those are the only times that you should see additional fees. That's if we write it in-house. Now, based on your credit, down payment, if it doesn't qualify for an in-house product, that's when we would then shop out elsewhere, okay? Ideally, these products will need a minimum credit score of 620, 640 and above. You need to have a CPA, enrolled agent, or a tax preparer that has a PTIN number to prepare you a letterhead stating that they in fact reviewed your taxes in the last 2 years and can justify support that your P&L is true and accurate. That is typically what we would need in lieu, and then also your last 2 months bank statements to support your down payment and also show that you have enough for reserves. That in a nutshell is what we would be asking for from you, whether you're buying a primary or second home, to use a P&L statement. We also have this available for investment properties as well. If you found this information useful, please like and share. And then if you haven't already, smash that subscribe button, and I'll see you guys in the next video.